Okay, hello and welcome to our audience members joining us from across the globe. I'm Raymond Karam, the Chief Program and Development Officer here at the Arab Gulf States Institute. We're continuing our coverage of current events here at the AGSI amid escalating conflict in the Middle East by looking at how oil markets are responding to these developments and also in anticipation of the US presidential election in less than 3 weeks. And we have a truly stellar panel of experts with us today to help us do that. I'll introduce them very briefly here and share a link to their full bios in the chat with you all. First, I'd like to welcome Li-Chen Sim, Assistant Professor at Khalifa University in Abu Dhabi and a non-resident scholar at the Middle East Institute. She's a specialist in the political economy of Russian and Gulf energy, oil, gas, renewables, nuclear, and its intersection with international relations. Her most recent publications include Low Carbon Energy in the Middle East and North Africa, published in 2021, and External Powers and the Gulf Monarchies, published in 2018. Also, a warm welcome to Iman Nasseri, the Managing Director of Middle East at FGE, based in Dubai, excuse me. He is responsible for Middle East oil research and has been involved with FGE's annual World Refining Outlook since 2014. As managing director of Middle East, he has been in charge of the FGE analysis and coverage of the Middle East for oil, natural gas, liquids, and power. Last but not least is our good friend Raad Alkadiri, Senior Associate in the Energy Security and Climate Change Program at CSIS. He is an international country risk specialist with over 20 years of experience advising senior oil and gas industry executive and government leaders. Previously, he was Managing Director for Energy, Climate, and Sustainability at Eurasia Group. He was also Senior Director at the BCG Center for Energy Impact, a Managing Director at IHS Energy, and Partner and Head of Markets and Country Strategies at PFC Energy. Moderating the session today is my colleague Kate Dourian. She's a non-resident fellow here at AGSI, a contributing editor at MEES, and a fellow at the Energy Institute. Previously, she was the regional manager for the Middle East and Gulf states at the World Energy Council, as well as the program officer for the Middle East and North Africa at the International Energy Agency. Kate has spent 3 decades in several Middle Eastern and North African countries as a journalist and energy analyst. And with that, Kate, over to you.
Thank you, Raymond, and I'm really, really glad to see new and old friends on this panel. We are just sort of days away from the presidential election. I think all of us have been writing about the implications for the Gulf states, for US energy policy, for the climate agenda, and so on. But at the moment, I think we want to focus on what's going on in the Middle East. Every time I look at the futures, the oil futures market, it's like Groundhog Day. You know, the price hasn't really moved very much. It sort of shot up after we had those missile attacks by Iran against Israel on October 1. But since then, they've sort of come off. They're still below last year's levels. I mean, why is the market so relaxed about the possibility of a wider conflagration? I mean, yes, there are many sides sort of calling for ceasefires, calling for restraint. Newspaper reports, nothing really official saying, oh, if the Israeli response isn't going to target Iranian oil and gas facilities or nuclear installations. I mean, is that realistic with all this firepower, with the Americans now sending their very sophisticated anti-missile defenses with American soldiers basically to run the defense system? I understand it takes about 100 people to operate these THAAD missiles. Why is the oil market so sanguine? I mean, I know the fundamentals, but I would like to have your opinions on why you think things are so, calm and relaxed on the oil side. And gas, obviously, is another one we should talk about because there's a lot of gas that comes out of here. Qatar is the second or third biggest exporter of LNG from the region, and it's particularly vulnerable because it has to go through the Strait of Hormuz. We heard today that there was actually a leak at an Iranian refinery, and I'm sure that, Iman, you've been watching it on Kharg Island, which is the main focus of a lot of people saying, if it's hit, then, it's not only Iran that'll be affected. I mean, let's not forget, this is a very narrow Gulf. So I'm going to start with you, Raad, because you've watched the markets for a long time. You're sitting in the States, I think. So please.
I think you've covered a great deal of it, Kate, and probably far more eloquently than I can. I mean, this is a market that is fixated on fundamentals at the moment and has a very, very bearish mindset. And that seems to be guiding its reaction. Now, the problem with conflict in the Middle East when it goes on for an extended period of time is the market becomes even more of a show, it gets into even more of a show me mindset. So, it is the case that, the conflict so far has been on the Eastern Med side, away certainly from major oil production. And as a result, as long as it's kept away from Iran, I think the market is focused on fundamentals because it doesn't see a major supply risk. When it does see a supply risk, it seems to nonetheless be somewhat sanguine. And, I think that this is a market that can be bitten in the ass quite badly by geopolitics, I think, in the coming months. I mean, the sense that there's sufficient spare capacity to cover a loss of Iranian barrels, that, at the end of the day, no one's going to close the Straits of Hormuz, something will step into that. I think all of that is partial wishful thinking. And all of that is also a product, again, of a market that just is, of the mindset that the price can only go down. It won't go up in the near future due to supply and demand factors. Now, can it get a surprise? Yes. I mean, would the Iranians sit back and actually not respond? Can this tit for tat be contained without a major escalation? Again, the market's in a show me as opposed to a worry about it now mentality. But I think the risk of an upside is there. A lot of it depends on Israeli policy, and quite frankly, Israeli policy is an unknown. And Israel is probably the most disruptive factor in the Middle East geopolitically right now. So there is a lot of gambling on sensible thinking, or at least conventional wisdom, that may not come to pass.
Thanks, Raad. I'm going to move to Li-Chen because one of the reasons why the market is also, prices are down is because of Chinese demand, right? Chinese demand growth has slowed. Chinese economic growth hasn't really, been up to expectations, and also the stimulus that the Chinese government is implemented isn't really going to have an impact overnight. So I think we're sort of waiting to see what impact it has. We're already in, we're trading January at the moment. So it's is that sort of realistic? And we've seen the IEA has again, seized demand by down below 1 million demand growth, below 1 million barrels a day for this year, going up to 1 million next year. OPEC has slightly revised down for the third month its demand forecast. But how important is this sort of the stimulus in China? Can we expect to see some improvement in demand growth, both oil and gas, I suppose?
Yes, I mean, the China factor is a big one, right? As the world's biggest oil importer. And I think, as you mentioned, the stimulus, it's going to take time to work if it does work, right? And also don't forget that Chinese are, they're quite cautious kind of consumers. So even if there's a big stimulus, we've got to see whether it trickles down. And the Chinese culture tends to focus a lot on saving. So unless they can see that in the further term that there's going to be more of a stimulus, even with the stimulus now, they will still intend to save. So that they're not really big spenders. And that's going to be part of the reason why Chinese demand, why construction is not going to pick up. And therefore, diesel, the use by the trucks, etc., is not going to pick up. So the Chinese story is a really big factor, the slowing of demand or stagnating demand. But to come back to the question that you posed to Raad earlier, I think also it's not just that the markets don't believe that Iran will not mind the Straits of Hormuz, and I think that's totally true. And it's because if they do mind the Straits of Hormuz, then they're going to annoy their main export destination, which is China, right? So I think China takes in about 90% of Iranian oil exports. So if Iran does that, that's going to pose a problem for itself and for its main customer, right? So I think as well, the oil markets are quite adaptable these days, right? We have seen how, because of the sanctions, they've managed to go around it find alternative supply chains, alternative routes. And so I think there's this flexibility that the oil markets have shown, the adaptability, and that's part of the reason why markets are, a bit sanguine, as you mentioned, Kate.
And of course, you've got Russia as well, which is supplying China. And Iran might find it a bit more difficult to get around the new sanctions because they have imposed new sanctions on tankers. And so I think that may be another, as you said, I mean, you've got this sort of the axis, you've got China, Russia, and Iran on one side, and now you've got the United States kind of inserting itself into this conflict. So Iman, I wanted to come to you and ask you, I mean, even if there are no direct attacks on nuclear, or because I think you need those, B-2 bombers, which I don't think are anywhere near us, but even if there's no attacks on energy infrastructure or the nuclear installations, what impact would it have on Iran? I mean, Netanyahu's spoken about regime change, regime change is coming sooner than you expect, when he had that direct message to Iran. As somebody who sort of looks at Iran quite closely, what impact would an attack have, even on just military installations?
I have to say that we're looking at three scenarios ahead of us in terms of retaliation of Israel on Iran. One is that, and I will talk about what's our base and what is, in my view, the likelihood of each of those. But one is to keep the fear factor in place and the threat of a major attack that is going to be really huge in terms of catastrophic and whatnot. In the meantime, continue to do what they have been doing recently, post-Iranian attack by the ballistic missile, and before that, which means that basically weakening Iran's proxies externally. They have been basically dealing with Hamas and then with the Hezbollah, and also continue to do in Syria, Iraq, and Yemen, and potentially people inside Iran. I mean, they did basically take the Hamas leader in Tehran. Let's not forget about that. So that could continue to happen in Iran. That will have two factors working. One is the fear of a bigger attack, and one at the same time weakening and eliminating the key figures, and also keeping the fear of who is next. That's one scenario. I don't necessarily discount or eliminate that. The second is what you described as attack on military and slash nuclear or nuclear sites, which is probably, in my opinion, more likely than the third, which seems to have already been discounted as least option or least scenario to attack the energy infrastructure, the oil fields, the refineries, export terminal, and whatnot. When we look at the first one, obviously no impact in terms of the market, but I think it will definitely have an impact on the strength of regime and Iranian leadership in the region, at least for its reputation of being a superpower in the region, internally for the domestic politics and externally, as well as its political acceptance within the country. But if we look at the second one, as your question is asking about the attack, it all depends on the answer that Iran will give, retaliation back, and can they stop the? I don't really know. I think it's like the game of keeping retaliations to retaliations, and if there is one that could impact basically either the Israeli gas supplies or the allies in the region. They have mentioned names of countries. Azerbaijan has been one of those that is close to Israel. That definitely will bring some impact to the market. Otherwise, I guess, and that's why perhaps we see the prices have come down, because people have put the direct attack on the oil infrastructure out, and the second one, they are saying that, well, a retaliation on the military sides will not be retaliated by an attack on. So the market impact will be minimal, and all that remains is basically the significance of Iran's military strength and political strength and power in the region. That's what I think has become more of a market consensus. And I have to say that it is our base case scenario as well, that we don't expect any significant impact on the markets based on what is yet to come.
But internally in Iran, I mean, do you think if there is an attack against Iran and sort of retaliation, is there, I mean, what is the mood inside Iran? I saw somebody sent me something yesterday about, you know, women giving their jewelry in support of Hezbollah in Lebanon, you know.
I have
Iran.
to say, what the example that you mentioned, I mean, that's a bit of that's a little bit extreme, but there is a truth into that, which an attack on Iran's infrastructure is going to work against the aim of changing in regime or changing in the mindset of animosity with Israel or all of that. If anything, it will bring people closer to the government, make them more united, and make them more patriots against an external attack. And that's why it really doesn't make sense to attack on the energy infrastructure, which has most implications and direct implication on the people's quality of life. But even if they go for nuclear sites, definitely it doesn't have much of an implication for the regime's life, but it will have, yes, people will, I think, react more in favor of the current administration or the current regime than against. So that is why, in my and again, I'm not reading the either side's mindset, but I'm just putting my reasonable hat on and think that well, okay, if this is the target, then it does not work for that target, and hence it's not going to happen.
And I mean, Raad, you spoke about the fact that there is ample supply in spare production capacity, and of course, the OPEC Plus is going to start bringing back some of the voluntary cuts, right? Supposedly in December, but it's, I mean, it's a drop in the ocean, right? It starts with at about 180. But the point is, even if you have like 5 million barrels a day of spare production capacity, you've got to get it to market, right? And that's where I think the worry is that if you can't get it to market, then what do? Do you release stocks? And the IEA, I think, said that they stood ready to release stocks in the market if there is a supply disruption, as they've done previously. But we've got the US election coming up, and everybody's sort of wondering how that's going to have an impact on Iran policy. I mean, before this happened, the new Iranian president, Pezeshkian, who's sort of moderate, was sort of saying, oh, we can do business with Trump because he's a businessman, right? I mean, there was a sort of softening of tone. Does that mean now that the sort of a new nuclear deal is off the table because the situation has escalated to an extent where it's impossible to resume negotiations? Is there going to be what is going to be the impact of the energy policies of either candidate? It's a very close race, so it's very difficult to tell who's going to be in the White House. But everybody expects, you know, if Trump is elected for a new term, then he's going to be tougher on Iran. He's going to be tougher on maybe Venezuela, not so much on Russia, maybe. He hates wind and solar, and he hates EVs, and he hates, you know, he thinks that planes will fall out of the sky if the sun isn't shining. He wants to drill. I mean, that's obviously going to be a challenge to the Gulf producers, which is where we're interested in looking at the impact on the relationship with the Gulf allies. Is it a challenge to them? And does the market really need more oil? I mean, you know, drill is all very good, but is there going to be a need? I mean, the latest IEA long-term report says it's still going to peak. You know, oil demand is going to peak before the end of the decade. So please,
I mean, four different questions, and I'll try and tie them together. I think the supply disruption, and again, it goes back to the market being sanguine in the show me mentality. The Straits of Hormuz may actually be a red herring. That isn't to say that it couldn't be mined, but where the Iranians have responded to pressure in the past has been to target facilities directly on the other side of the Gulf. I think some of the diplomacy and the accelerated diplomacy that you have seen between Iran and Saudi Arabia and the UAE, Bahrain, etc., all points to that concern that the Iranians won't try and close off the Gulf, the Straits of Hormuz. What they'll do is, refocus on Abqaiq, focus on Abu Dhabi facilities, things that they did in 2019, 2020. So not out of the realm of possibility, but potentially doing it sort of, in a more extreme, certainly in a larger fashion this time. That to me would be the worry of retaliation, that it is, if we're going down, everyone's going down with us. And I think that also removes this issue of exports to China. And let's face it, this would be in response to an potential attack on Iranian oil facilities that's going to remove those exports to China anyway. So, in many ways, what you've got is a domino effect. But I think that is potentially should be more of a worry to the market. And that's where I said it could find itself surprised, just simply because that really all depends on Israeli decision making. And I think people have been consistently wrong all along in how restrained Israel is willing to be, and indeed probably sort of incorrect all along on what the Netanyahu government's ultimate goals are. But moving that to the US election, I think the Israelis may want to wait out and see if they get if Trump wins, and if Trump wins, that might be a perfect opportunity post November the 5th to do something quickly, believing that they have a freer hand and that Biden is a lame duck. We can wait and see. And the Israelis have proven to be sort of more adept at understanding US domestic politics than sort of many US commentators seem to have been. So they're doing a good job on that. I think in terms of energy policy more generally, actually, Kate, you touched on sort of the bits at the back end about whether the world needs more oil. And so, the notion is, absolutely, the Trump administration is, the Trump team has signaled that campaign, a Trump administration would look at, certainly pulling out of the Paris climate accords again, trying to unwind some of the IRA, although, unwinding that may hit red states and investment in red states to an extent that will probably be managed. But I think the overall question is, drill, Davy, drill, is what we've seen in terms of US oil and gas expansion and growth over the last few years a product of the Biden administration's policy, or is it market reality? I mean, what you had really by 2019 was an expansion in US production that was at a very accelerated rate and done entirely on debt. And there was a rationalization that was hitting even before we went into COVID and even before the Trump administration, had left office. A recent study by Rystad that I was looking at, you had 8.9% growth over the Trump years in terms of oil production in the US, onshore oil production. It grew by 6.5% over Biden. So this is hardly an industry that is being battered as much as it says it's being battered. And I think that ultimately those market dynamics you're talking about will come to be more important in terms of oil and gas production than anything to do with the rhetoric of the Trump administration. If they make it easier, if they give new tax incentives, etc., if they take subsidies off renewables, fine. Are you going to get companies, and now it is much bigger companies, the likes of Exxon and Chevron, that are dominating domestic unconventional production? are those guys going to go into a spend mode in the same way that the smaller independents did, at a time when, they're focused on return to shareholders, they're focused on share buybacks, they're focused on dividends. So I think, again, the realities of the sector is probably going to have more impact over the next 4 years, even though the rhetoric and the underlying policy towards climate and emissions will be significantly different.
Thanks, Raad. Li-Chen, one of the important sort of players in the market is obviously Russia. The sanctions haven't really worked. Russia is still exporting. The economy has not really suffered because it's now a war economy. And I think today they've come out and sort of warned against attacks on Iran's nuclear facilities. Obviously, they were involved at the very beginning. How do you see the whole relationship with Russia is part of the OPEC Plus, right? So there is a relationship with the Gulf states. They're also close to Iran. There's a sort of relationship with China, which is supposed to be quite warm, but I think the Chinese are a bit wary. Obviously, they take a lot of Russian oil. How do you see that whole dynamic developing, on a sort of geopolitical front?
Oh, that's a great question. So if you look at the OPEC Plus angle, I think the war, so that the Saudis have been quite annoyed with some of the quota busters and have been trying to encourage them to stick to their quotas. I think the war in Ukraine constrains the Saudi options to actually do a nuclear option and just flood the market with Saudi oil, right? Because if he does that, then he's going to annoy his OPEC Plus co-chair, which is Russia, and because it's going to make it more difficult for Russia to continue conducting the war if the financing it's dropped because of the oil prices. So I think that really complicates it for the war in Ukraine, really complicates it for Saudi's options to rein in the quota busters. But with regards to, say, the China angle, I think the Gulf states are still, China is still massively important for the Gulf oil exporters. China is something like, I think, the second largest export market for UAE crude after Japan, but it is the largest export market for Saudi Arabia and Kuwait. And I think it's basically almost the only export destination for Kuwaiti oil. So China still remains a very, very important oil market for the oil exporters from the Gulf, but also, as well as you mentioned in the beginning, in terms of gas, China is also hugely important for Gulf oil exporters, not just for Qatar, which is of course a large oil exporter to China, but also to others like Oman and to the UAE as well. And so in terms, if you're asking about, say, gas, because you mentioned that we should talk about gas as well. I think, yes, China does export gas from Russia. But the problem is that, I don't think China is going to take in more gas from Russia, especially pipeline gas. For example, it's not making any progress in agreeing to a new Power of Siberia gas pipeline from Russia to China only. China so far been unwilling to sign off on this. China is also unwilling to take LNG from sanctioned Arctic 2 project that Russia is running. So I think the Gulf oil gas exporters have a good opportunity to continue selling their gas to China.
Thank you, Iman. Yeah, I was going to ask you about the Power of Siberia too, because I think it was mentioned in the IEA World Energy Outlook that came out yesterday, basically saying there is going to be a glut of gas after 25, and if prices don't really fall, then prices have to be low enough to compete with coal and with sort of renewables where prices are coming down.
And also as well, it's not just prices, but also China's diversification of its suppliers, right? China's always been very careful about that. It doesn't want to take too much from any one partner, even if it's Russia. So, it's already importing a lot of pipeline gas, LNG gas, and Russian oil. So I think it wants to be a bit careful about being too dependent.
Yeah, thanks. Sorry, one of the things I actually wrote a blog for AGSIW about the potential impact of the US election, the outcome of the election on the Gulf states, on their relationships. And one of the things I mentioned is, I mean, if you look at US is no longer as import dependent as it was, before shale. It used to import 13 million barrels a day, and a lot of it came from Saudi Arabia and from the Middle East. And if you look at the numbers now, I mean, they're way down, and yet you still have Kamala Harris and both Trump talking about energy independence, and we need to become energy independent. And saying, your biggest supplier is Canada. For goodness sakes, it's not really a foreign power, but with the sort of this relationship has changed, because we're also seeing more investment flowing from the Middle East into US energy, particularly in LNG. We've seen Saudi Arabia, we've seen the UAE taking stakes in US LNG projects. We've seen Exxon and ADNOC now involved in hydrogen. So I think the relationship has shifted. It's no longer one of, oh, you export oil to us and we give you, our sort of the military, the security umbrella. It's more a sort of relationship, not of equals, but it has evolved. I mean, Raad, do you agree that there has been a shift in the energy relationship?
Absolutely. I mean, I think the essence of that shift really came from the shale revolution and what it did for US domestic supply. I mean, I always laugh for exactly the same reason that you mentioned when US politicians talk about energy independence. One, because it seemingly has it's not grounded in any particular understanding of where the US gets its energy, unless you do count Canada as a province, which Canada might see it somewhat differently. But the levels of flows coming into the US from supposedly adversarial countries is far less than it was before, and the nature of the US energy markets are such that it is more self-dependent. I mean, and it can be seen in some cases in the rise in exports from the US versus what it was in the past. So I think in that sense there's been a change. I think the Gulf states have been canny. And Qatar tends to be ahead of the game in a lot of this, and has been in a lot of its investments and its investment strategy. It's strategic to take stakes, one, in industries and in sectors that you depend on, and therefore you can have an influence on in terms of production elsewhere. There was always the belief, I think, in Abu Dhabi and in Saudi Arabia that you'd get technology and know-how transfer by investing abroad. And strategically, it fits with the policies of the Gulf states, which is not to be dependent on one side or the other. So while China is, a vital market, the US, it's an understanding that ideally you want to maximize your flexibility by having strategic relations with both sides. I think some of the investment that you've seen through the sovereign wealth funds, not just into sort of energy, but more broadly, has been about creating a stake for these countries in the United States and in US thinking, and at the same time, diversifying your investments and sort of trying to get return. But why not do it in sectors that you know best and sectors that ultimately you want an influence on?
Yeah, I want to get to the sort of the economies of the Gulf states as well, with prices at these levels. But before that, I wanted to ask Iman. We were talking before, and I keep going back to the US election because it's really sort of all tied in. If oil prices were higher, if they go up and gasoline prices in the States go shooting up, of course, it's going to penalize the incumbent Democrat Party. And we know that in this part of the world, there are certain countries that would like to see the Republicans back in power, right, in the White House. Even if there are certain areas where the policies don't really align with their own interests. But somehow, I mean, I was talking to a former ambassador, and he said, he was in Abu Dhabi, and he said there was no mention of the Democrats. The Democrats were not even mentioned in the conversation. It wasn't just a UAE event, but it was, that they seemed to find an affinity more with the Republican agenda, not just the agenda, but I think even on a social level, they seem to think that they have more in common with the Republican Party than with the more liberal Democrat Party. So, and before that, we were talking about what happened to President Carter with the release of the hostages, right? That had an impact. Foreign policy doesn't really have much impact on the US elections, right? But gasoline prices do. So if you wanted to influence the election in one way or another, do we think that that's going to have do you think that's going to influence what happens in the Middle East and the timing of maybe a retaliatory attack against Iran?
Yeah, we saw what happened to prices overnight or in a few days when the ballistic missiles went from Iran to Israel and the fear of a retaliation. We were both in Fujairah, Kate, that we were talking about it and we went home or we went to our hotel rooms and came back to say, okay, it happened. Now what? Right? So, and we saw the prices shoot up $7-8 from low 70s into high 70s, and for I think they just exceeded 80 for intraday. So that is what's going to happen if something happens that could potentially threaten the supply. Now, we know that the domino effect is the one that everyone will be worried, not the first single attack or even the immediate response. It is what is going to come next that is always the scare, because what happens, and we know, and basically the known damage to the energy supply is always easy to identify, to quantify, and to replace immediately, either through a spare capacity in terms of crude and supply, or stocks and inventories when it comes to products, right? So that is not a big issue. But what comes next, and okay, who is going to do next? That definitely can shoot the prices up to $100 or more if that domino starts. Now, where it ends and where the prices or how long it stays up, it depends on when it stops and the remediation of those damages caused by that first or second domino that falls. So definitely it can create the prices. We know that there is a lag between the crude price going up and the gasoline prices in a normal market, but if it's a geopolitical risk and risk factor, even the refiners and the product market could see the prices jump immediately rather than a normal crude going into the refining basket, and then in a month or so we see it at the pump. So I would certainly see that if something happens for that purpose or with that having in mind, it could cause. Now, the second part of this is that, okay, it could cause the prices at the pump to go up. But how does that, because, see, there are two types of higher prices. We know that we have always talked about $4 a gallon being that treasure in the consumer's mindset in the US, that, oh my God, it's now a major item in the consumer's basket. But if it's basically fundamental and something that is more of a longer term supply demand issue rather than a short term, everyone would know if that thing happened that these prices are spiked on the fear factor. There is no immediate short term. I don't know if that will harm or have the same impact than a short market and a supply constrained or a demand driven inflated price will have. And remember that the Americans also are watching this thing, and in fact, how US has so far and will in that scenario involve into this may have equal or not, if not more, of an impact on the mindset of, okay, so should we keep this kind of Democrat administration in the office as they have failed to prevent a war, for example, or control it or not? So I see that as a bigger impact, in my opinion, than a risk triggered price inflation, which always these kind of price inflations are short term. It's not going to stay for 6 months, 12 months, 18 months. There will be something that happens and bring the prices back down if it's caused by an attack. So that's my take on this. However, I have to say that in terms of the US policy, when it comes to what we have seen in the East Med and the Middle East, especially with regard to Israel and Gaza and now Hezbollah and Iran, it's to me it is a neutral kind of stance and less direct involvement, or maybe it has lost its how should I say, efficacy into the Israelis or Netanyahu's plans. And as Raad rightly mentioned, it's very hard these days to call and say what comes next when it comes to Israel policy or the plans of a Netanyahu administration in Israel. So do they care, the Israel, in terms of what to do in what is going to cause to the US prices at the pump, or the consumers, sorry, the Americans read on the US policy when it comes to Israel? I'm not 100% sure on that.
Okay, thanks. Yeah, no, I had, we're talking about at a recent lunch, energy lunch in Dubai, somebody mentioned that the whole idea of hurling so many missiles at once at Israel, as Iran did, was to try to overwhelm the air defense systems that would allow the proxies, and we're talking not just proxies, we've got Iraq, we've got Hezbollah, we've got Hamas, we've got the Houthis, to sort of to launch their own attacks, which didn't really happen. And of course, now we've got the Americans coming in saying, we did it to prevent a wider conflagration. But when you've got so much flying around, I mean, it's scary. And there's one number, somebody who does know, said the number of non-state actors, armed non-state actors in the region, and I don't think we're talking North Africa either, just within the region, we're talking the Iran proxies, is about 700,000. I mean, that's a lot of, you can get rid of the leaders, and we're seeing it happen. And there's reports that Hamas leader Sinwar might have been killed in an attack in Gaza. But I mean, there is still a lot of. I mean, if I were a trader at the moment, given what's going on, I wouldn't want to go home short. I mean, I think the market was short. I think people have covered. It's kind of expensive to cover, but it's starting to happen. So I think maybe we'll see prices at these levels. But what I wanted to ask, Li-Chen, I mean, you look at the economies of the Gulf states as well, I think, in terms of where the price is. We recently had this FT report saying, oh, Saudi Arabia is ready to abandon its $100 target, which it really doesn't have. OPEC doesn't have a target. Saudi doesn't have a target. OPEC had targets, they always used to miss them, and then they kind of just dropped it. Raad, you remember, right? So, and that they're willing to... And then everybody says, oh, but they need a higher price. I mean, at these levels of prices, shale producers seem to be quite happy because costs have come down, technology has improved. But what of the Gulfs, can they afford for prices to maybe even fall below 70? Because if you take out the geopolitical risk factor, that's quite a possibility.
Yeah, it's a great question, Kate. And I do think that some not all, some Gulf states can actually make do with a lower oil price. So let's say even 70, 60, right? I think some Gulf states are able to do that. And I have in mind the UAE, which has quite a relatively well diversified economy. So I think that it can, stand oil prices at, even $60 a barrel, right? But if you look at Saudi, then Saudi or even Bahrain, right? They can't. They need that high oil price. Bahrain needs the cash to diversify its economy. Saudi Arabia's got, million and one projects going on. And so I think we saw the recent Bloomberg estimates that if you included PIF kind of projects, Saudi needs something like over $100 barrel price to balance their budgets. But of course, the Saudis may not be thinking about balanced budgets. They're pretty happy to, or not pretty happy, but they're quite used to having deficits. So, that's just a figure. But still, I think it's important, that figure, because it means that if Saudi needs oil at $100, then that's going to be $40 above, a $60 oil price. So I think some states can withstand it, some can't. I think, for example, Oman probably can as well. I mean, it's been quite disciplined about its budget. It's paying down its debt. So depending, maybe $70, it can still have a relatively balanced budget. So I think it's important that some Gulf states can and some can't. But even for Saudi Arabia, who cannot, it still has got cushions. It can take on more debt if it wants. But can I come back to the question which you posed earlier about, I think through Raad, about the Raad mentioned that Gulf oil states are quite canny, if you remember that remark. And I think part of that is not just about expanding to new markets, as Raad mentioned, but part of that is also thinking about domestic diversification away from oil, because having, let's say, oil trading, which is something that most of the Gulf, the national oil companies have now, even having that oil trading business is part of diversification, because then at least you can get local talent who know how to trade, and you don't have to depend on third-party traders. That's also part of the grooming domestic talent. So that's, I think, quite important, as opposed to the commercialization idea as well.
Yeah, that's really good, because they used to be price takers and now they're becoming more and more price makers. And we've seen, the launch of the exchange in Abu Dhabi. I want to open it up to questions. I don't see any in the chat box. So if anybody has any questions, please do send them on, and we'll try to get to them. But Iman, what are you at FGU working on at the moment? I mean, what is your, you do a lot of research on various issues. What is your main focus at the moment?
Well, obviously, our job is fundamental analysis, supply demand. So that's our day-to-day job. And what has been keeping us busier than normal is all these uncertainties, all these additional layer of either political risk or possibilities, scenarios regarding both supply and demand disruptions. It basically, I've been with FG and doing this since 2009. The last 4 years, since 2020, I mean, we started with IMO 2020, and there was a lot of what ifs coming into play. The last 4 years has been just basically non-stop, huge uncertainties. And right now, obviously, the key topics that we are looking at is the demand, which everyone is talking about and worried. We're now basically second half of October. People are still discussing and arguing and disagreeing on 2024 year-on-year demand. So that tells you how fragmented the market is and confused, and basically that has a big implication for looking forward. So if we can't if we can't agree on the last 10 months, how can we, which has happened, has had economics, statistics coming out, many other factors, many other components of that demand is already captured, such as aviation and whatnot. What is next? So 2025 demand is one factor. Obviously, the US election, we talked a little bit about various factors, but when it comes to gas, everyone knows that basically the pause on these US LNG exports have been a big discussion for the LNG market, whether that will continue, whether Trump, if he comes, we think that he will immediately lift. Harris could basically linger for much longer. And then we're having all the other US upstream in terms of emissions and flaring limitations, in terms of offshore and the leasing plans and all of that. So US election and the potential impact is another one. And now, of course, recently is Iran. The past year or two was, or it started with Russia. I think the Russian equation is now more or less solved for many people, or it's known, at least the variables and the uncertainties are well constrained within reasonable ranges. And now the three factors are demand, with China at the center of it, but I think it's not only China. Overall demand. We also have huge discrepancies and discussions. I am looking at the Middle East, and my Middle East demand figures and potential variations between my estimate for 2025 and the IEA is only about 400 kVd difference. So that shows how crucial demand uncertainty is in the mix. And then obviously, as I mentioned, the US election and Iran. So and with me being again in charge of the Middle East and Iran NFG, I've been very busy with the same topic that we're discussing now. And as I mentioned, we have written one at the intersection of these two, a US election and the Israel-Iran is a note that is imminently to be released, which is basically most of what we're discussing here.
Thanks, Iman. Li-Chen, you have your hand up.
Yeah, I just wanted to add to what Iman just mentioned, that about the US election. So another thing that we haven't actually mentioned is no matter who comes into the White House, there is this problem with tariffs and counter tariffs of China. So I think that's something that we need to mention, because no matter who comes to the White House, there will be this kind of like a tariff war. It's just a question of degree, right? If whether Trump comes in or whether Kamala Harris comes in, it's a question of degree. But there's bipartisan support for a bit of harsher measures against China. So this tariff war may actually, depending on how serious, how long it goes, it may actually lower overall global economic growth, right? And with lower economic growth, we're going to see reduced demand for not just oil and gas, and then that will greatly impact the Gulf producers. So I think that's something to watch as well.
But it could also slow down, couldn't it? I mean, it could also add to demand, because if you don't have, if you have delay in the supply chains, I mean, China is such a huge producer of all the components that you need for the renewable energy. Then if that slows down, if EV sales, if you don't get incentives to buy EVs, if you take away the incentives in the US for investing in, in renewable sources, wind or solar, then obviously that's going to mean higher demand for oil and gas. No, but but I did want to bring up the tariffs, obviously, because that's a big issue. I know, Iman, you've got your hand up. Quickly before I go to Raad, please go ahead.
Okay, well, thank you. I thought you wanted to say that my hand is raised, but you want to go to Raad, which I welcome.
No, I'll go to Raad after you, because
okay.
you have
so
your hand
one
raised.
quick thing, because I forgot to mention that part of what is included in that and the Trump thing, I forgot to mention that is a common question that I've been asked over the past several months. I had a visit to China in June, and I visited all the NOCs and several of the key independents. They were asking this. The market here and overall traders are asking, can Trump, I mean, let's put the Israel situation aside for a second and assume that nothing will happen on the energy market, but can Trump bring Iranian exports down, which at the moment is in a monthly basis is just short of 3 million barrels per day of total crude, condensate, and products, which is about 1.7 million of crude, roughly around 100 to 200 kbd of condensate, and about 1 million barrels per day of products. So can Trump bring this down as he did last time? This is a discussion also which has the order of uncertainty is 3 million barrels per day, right? 3 million current and 0 is the extreme case. Last time he brought it down to less than 1 million in that total with 300 kbd of crude and about less than 700 kbd of products, which people tend to forget because everyone's like, yeah, Trump brought Iran's export down to 300 kbd. No, he brought it down to less than 1 million barrels per day because products is hard to be chased and traced and stopped, as we saw on both occasions, right? So 3 million, let's say down to 1 million, that's 2 million barrels per day of uncertainty that the market is also interested to know that regardless of this Israel, that has been a question for the past few months. My opinion, contrast with some of my senior team at FG, not to a great extent, but I think it's hard this time to cut Iranian exports down significantly. My assessment is maybe up to 500 kbd from this 3 million, but maybe less in the short term, and is going to be within a month to be replaced by the new buyers in China who are willing to take that crude. And in terms of product, I see very little impact. The only way that I see Trump succeeding in that, and we have to remember whether if he has to first want to do that, because he also mentioned in one of his speeches about a month ago that when I introduced sanctions, the harsh sanctions back in the day, it was a negotiating tool. It wasn't meant to be kept in place forever, which has been basically the case on the Biden administration, which has lost its efficacy. So if he really wants to go after harsher, I think he will have a very, very tough time. And the only way he could do that is to go to every one of these facilitating countries of, let's say, Iraq, Pakistan, UAE, Oman, Malaysia, and say, put a big threat to their relationship, the arms sales agreements and anything else that is in place, to say that you guys have to go out and police your ports and waters to make sure that there is no Iranian oil coming. And that's a big task, and I'm not betting on that.
Yeah, you're referring to the fact that there is more Omani oil being exported than Oman produces, which is sort of disguised Iranian, which is Iranian oil. But Raad, I was going to come to you because one of the things that came up was Strait of Hormuz and the possibility that it might be. I mean, I keep saying if Iran shuts it down, they can cause a nuisance. I mean, you can't physically shut it down. You can cause a nuisance. They would be cutting off their nose to spite their face unless they really could not export anything at all. And given the sort of the very right-wing elements in the Netanyahu government, you can't really take it for at face value that there isn't going to be any targeting of Iranian energy infrastructure. But there is a question that's come in from Sam Daher, who says that today the Saudi ambassador to UK, Prince Khalid, told a Politico podcast that the kingdom has been assured by Iran that even if Israel hits Iran's oil facilities, Tehran and members of its so-called axis of resistance won't target oil facilities of Gulf states or disrupt Strait of Hormuz. So your thoughts, Raad, since you've been quiet for a while, I'll go to you first.
It's possible. And the Iranians are clearly giving messages to try and, there's another element to that, which is, closing off Saudi airspace and closing off any sort of Saudi potential facilitation of Iranian attacks, of Israeli attacks. So yeah, absolutely. I think, what the Saudis are keen to do is to reduce the tension. And I think the Iranians are keen to reduce the tension in the region. But, it goes back to my comment about the most unpredictable factor and the biggest disruptor is Iran. And, we focused on nuclear facilities, we focused on military facilities, oil facilities, etc. What the Israelis have been doing as they've escalated this war has been going after leaderships. Were the attacks to actually take place in and around senior figures in the Iranian regime, then I think the Iranians will have a slightly different view and, will want the Saudis on their side, will want the UAE on their side, the Gulf states on their side. But, at that point, things become a little more unpredictable. So I would take the Saudi ambassador at his word. I would take the Iranians at their word as it stands, absent significant escalation, because neither of those two countries want escalation. What the Israelis choose to do is a matter that, as I say, has continued to surprise in an escalatory fashion, as opposed to being willing to calm tensions in the region.
But I mean, would the IRGC not want to be involved? And then you would sort of have this, because you've got radicals on both sides, right, who really do want to escalate it, and everybody says they want the Americans to be involved. And at some point, the Israelis apparently don't have the capacity for mid-air refueling. They actually, apparently their planes are too old. The new ones aren't going to get there for a while, so they can't really do it on their own, which is to sort of try to get the Americans into it. But I've also heard that, there is a feeling within the region that things have to get worse before they get better, that you sort of want to get rid of these destabilizing elements in the Middle East so that you can at least have, an expansion of the Abraham Accords. And I want to come to that because that allowed for investments by, the Abraham Accords opened the door to investment by, UAE into the offshore Israeli gas projects. Now we're seeing, I'm surprised that they haven't actually shut them down, considering that Hezbollah has previously said that they would target gas fields, which they haven't. So, Li-Chen, that's part of the sort of the geopolitical scene. Are we going to, some of the projects have been impacted, but, the East Mediterranean has become really important. Israeli gas has become really important to Egypt and somewhat to Jordan. So if you have any cuts in supply, I mean, that's really going to hurt Egypt and Jordan. But at the same time, it is an indication of those growing economic ties, which were about to be expanded to maybe include Saudi Arabia before October 7.
Yes, absolutely. And I think I will link my response back to what the question in the Q&A about what the Saudi Arabia ambassador said. And as Raad has mentioned, there are a lot of sides that don't want this to be escalated, right? Because of various reasons, because it can benefit the East Med gas projects. Egypt hopefully gets its Suez Canal revenue back, or at least gets its projects going again, and so does Jordan. The Abraham Accords came up with some of these projects between Jordan, Israel, and the UAE for water desalination in exchange for energy. So I think all these projects would only go on if there was peace. Right. So I think that there's a lot to be said for parties, even in Iran, not all, obviously, that want the peace. Some parties in Israel also want the peace. But, who wins, the hardliners, the peaceniks, it remains to be seen. But yes, there is a tremendous amount of motivation, even from Saudi Arabia, to want that peace in the region so that can be investment and prosperity. So I think we'll have to wait and see, what happens if the peaceniks win over the hawks.
To go back to that Strait of Hormuz, I was going to say that there are certain countries that are more vulnerable to a shutdown or to disruption, or to, if there is a risk and insurance rates go up, We're already seeing, tanker rates are going up for certain types of tankers. Obviously, Iran has no other outlet except the Gulf, Strait of Hormuz. Iraq, at the moment, because of the whole issue with Kurdistan, does not have any other outlet except the Gulf. Qatar doesn't have one. Oman obviously lies outside the Strait of Hormuz. UAE is exporting more and more through Fujairah, through outside. Saudi Arabia can actually go through the Suez Canal from the west. So what is the impact on a country like Iraq, which is more than 90% dependent on oil revenues and is actually not actively involved as a government, as a state, but there are the non-state pro-Iranian militias who are sort of also inserting themselves into the battles and hurling missiles. How do you see the situation in Iraq? Because obviously you and I were there just after the invasion. That was quite something. So
okay, I don't think Iraq has tended to look at it in oil terms. I mean, there's been a certain disconnect in how the Iraqi government has approached the regional crisis. I think the Iraqi government has tended to be sort of much more inward looking. The armed groups that are there, some of whom are linked to the government and some of whom sort of aren't, tend to sort of have their own domestic agendas as well as having sort of regional agendas, and that plays into it. But they're certainly a disruptive factor. Now, arguably the Sudani government has been able to corral the worst instincts of some of these groups, even if it hasn't been able to sort of shut them down completely. And while you get occasional announcements of attacks, certainly, some of the bigger groups have been sort of shown restraint compared to their rhetoric. And Iraq, ironically, sort of after the sort of last 21 years, is probably the most militant Arab state in the region when it comes to Israel still. And that sort of goes, that's certainly in the Arab parts of Iraq is true. But I don't think there has been a thought in terms of the Straits of Hormuz. I mean, so the Iraqis will worry about it. I mean, they know where their oil goes and how it goes. The Kurdistan pipeline isn't an alternative. It doesn't have the capacity to move the crude. It isn't linked to southern pipelines. It's one of the reasons that Iraq has sought to diversify its exports. But I think, Iraq, again, has been, there's been a sense of Iraq being sanguine. At times they've worried about being targeted by the Israelis, but on the whole, haven't sort of added up all the pieces that I can see, at least in terms of how this conflict could escalate and what it really means for them. If you had the Straits of Hormuz closed, if you had disruptions to shipping, it would destroy the Iraqi finances in the short term, and it would almost certainly undermine Prime Minister Sudani's ambitions for a second term. So there are really important implications there. But none that, what Iraq has sought to do, again, much like other countries in the region, is as much as possible to keep its head down, to manage the armed groups in as much as it can, and to hope that this crisis doesn't escalate. And the more it escalates, the more it has to sort of deal with a reality that it would rather not, it didn't exist.
Okay. Going to go back to geopolitics. I read the Republican manifesto, which is very, very short, by the way. If you look at their campaign, it's about 21, 22 pages long. And I think the Democrats, it's over 90 pages long. And I didn't read every word, but I did. It was very easy to go through the Republican one. And one of the things that it says is, keep the dollar as a reserve currency. So there's been a lot of talk recently about, de-dollarization, about China and the BRICS. And, obviously there's a summit coming up. So I wanted to ask you, Li-Chen, is this sort of the whole expansion of the BRICS to include Iran, to include Saudi Arabia? Well, Saudis haven't really committed yet, but Iran and the UAE. How is that changing the whole balance of power in the region? Is it really Is it real?
I tend to see BRICS as, or the Gulf memberships in BRICS as more of a signaling function. I may be wrong, but I don't really see the BRICS as being very powerful in terms of proper, policy, in terms of proper action. Yes, the intention is there to make the BRICS as a non-Western alternative to the world order, that kind of thing, show solidarity with Gulf countries, etc. But I just cannot see very much significant. There will be some, but I cannot see significant de-dollarization happening. You and I know that there have been trades in rupees and in renminbi, but these are few and far in between. And I guess they're more like tests, kind of like pilot kind of projects to see if it works. So I think you will see more de-dollarization in terms of trades being in other currencies, but I don't think they're going to be hugely significant. And I don't think there's going to be de-dollarization for the very simple fact that the Gulf states, even Saudi, who is, as you say, yes or no to be a member in BRICS, they're still thinking about it. I think that for the Gulf states, they are still pegged. Except for Kuwait, where they're still properly pegged to the US dollar, and a lot of their money is still in the US. So I really can't see them doing a sudden de-dollarization. If that is going to happen, it's going to be like super, super gradual. But I don't think it's going to be anything significant that would threaten the primacy of the dollar in these transactions.
Thanks. Iman, you've been very patient.
I have been patient because I wanted to, before you ask a question, which I didn't need to put on hold, let me, because you guys mentioned Iraq, and that was very interesting conversation between you and Raad to listen. But another piece that because you asked what we were doing, was knowledge is being edited with our editors to be sent to our clients, and that's basically the Iran-Iraq energy affairs and the significance of Iran's energy supply to Iraq. Now, we talked about, I mean, there was a mention of Iraq's dependency on oil revenue. That's significant, everyone knows, and part of their, the entire non-compliance issue is that if they want to comply, they will have to lose 200, 300, 400 kbd of export revenue, and that's a significant hit to their economy, all of that. But that is if there is an interruption in the flows, that everyone will share the pain, right? However, I want to summarize a piece that we're writing on the significance of Iran's energy supply to Iraq. That piece reveals that Iran's basically has been supplying natural gas and electricity to Iraq, and that has been on the rise. In 2017, Iran's contribution to power supply in Iraq, directly through gas power exports and indirectly through gas supply, which is all used for power generation, has been about 7%. It raised to around 30% by 2020 through increasing gas exports via the two pipelines that Iran has. Now that has come down to just above 20%, but still 20% of Iraqi's power comes from Iran and is mainly gas. The power element, the power export is small. So then I want to tie it back to what you referred, Kate, which is a very fair statement by our dear friend Robin Mills, that gas is perhaps, if Iran's gas assets are attacked or there's a damage there, it could be even more disruptive to the entire market and region. Now, Iraq will be the first victim, because the moment Iran is already gas short, and they are basically pushing themselves so hard to comply near as much as possible near to their minimum take or pay volume to Iraq. If there is any supply disruption, they're going to shut that pipeline, and that means 20% less supply, and that means extensive power outage in Iraq. So that's number one. Second is that if there is a disruption in the condensate production in South Pars or condensate processing in Bandarbaz or Persian Gulf Star. That means an immediate loss of 400 kbd of condensates offtake, and that's over 10 BCF a day, or about 1/3 of Iranian gas supply. And that means catastrophe for the country. And then obviously Turkey is also another buyer of Iranian gas, so they have to import LNG. So there is a lot of gas implications here, which the market tends to ignore, which, as I said, there is Iraq and Turkey, right, the two immediate kind of victims who will suffer. But then obviously domestically for Iran, oil facilities, infrastructure, pipeline, export terminal, and anything is not as damaging, because 50% of Iran's energy supply comes from gas, and 70% comes from gas, and 70% of that comes from South Pars. So South Pars is 50% of Iran's entire energy consumption in that country, and that's a very important source.
And of course, hydro is down because, it's, in fact, hydro is down in so many parts of the world, partly because of climate change. I know, Li-Chen, you have to leave soon, but we were going to go back to the one of the things that, well, the tariffs and their impacts, but at the same time, for Iraq to buy energy from Iran, they need waivers from the US. And I think Trump has kind of indicated that maybe no more waivers, because it's all going into the pockets of Iranians. Is that, I mean, that would be damaging to Iraq and to Turkey to an extent. But Turkey can presumably take more from Russia or from Central Asia. I mean, they do have one of the, we had this shock, this energy shock after Ukraine, when gas was interrupted by Russia, actually, not by, I mean, there were sanctions on Russian oil, but it was the Russians who stopped. So, and everybody was thinking there was going to be a supply shock, prices went through the roof. And now we're sort of, which makes it even more surprising that we are so sanguine about the fact that there is, this is the region. The Middle East has always been identified as one of the biggest oil and gas producing regions, and that there is so much firepower at the moment, and it's still sort of being really, it's very sanguine. But again, we are in a transition, so it's even more disruptive, because you've got the energy transition, you've got all this geopolitical storm, you've got elections that have really changed the sort of the format of governments in Europe. In the US, we're wait and see what happens. We've seen what's happened in certain European countries. So I'm just wondering, where do we go from here? With all this disruption, with the disruptive, energy transition, which is going to have an impact at some point in this region as well, in terms of revenues, if indeed the IEA is right, and we are sort of staring peak demand in the face. So very quickly, if you could all give me an idea of where you see, where are we heading from now? And I'm going to give Li-Chen first, because she has to jump off before the end.
Thank you. So looking at the energy transition, yes, it is some kind of a destruction, especially of oil revenues. I think we've all seen the figures from IEA that, calculates that up to 70% of the revenues could be lost by OPEC countries. So that's massive, right? But I think at the same time, we cannot just look at it as destruction, because the energy transition could be a creative destruction, right? It could give rise to new opportunities. So new opportunities for who? Well, for gas, right? For gas, for LNG exporters. And that's why, as Raad explained, the Gulf gas exporters are really enthusiastic about LNG, and they've taken stakes in various LNG projects. So that's one of the creative part of the destruction when it comes to the energy governance and climate discussion. The other area of the creative part of the destruction would be in encouraging Gulf states to be more creative about other sources of diversification. So in this sense, you have green products, whether it's green steel, green aluminum, these will find markets in Europe, especially with the CBAM, the carbon border adjustment mechanism coming into play in Europe. The Gulf states have to, if they want to export premium steel to Volkswagen and to all these car parts that make, premium electric vehicles. So, that's the opportunity for them. That's the opportunity for Bahrain as well for the aluminum products. If you're going to want to have more solar, you're going to need to have more solar racks, and that's aluminum. So again, that the green part there is to export to Europe or some of these more green countries. So that's the creative bit. Obviously, the Gulf states are not just going all green. Now they also have some of the old, or what you call the fossil fuel based kind of products that they can ship to Asia. So I think that they're quite good in having to play both markets, right? Both the green ones and the not so green ones. So I think for some states in the Gulf, I believe they're doing a good job at trying to be more creative when it comes to the post-oil or post-oil kind of economy. Another country I do want to flag is Oman, and I think Oman is quite an interesting. It's normally forgotten because it's quite small, but Oman is quite a large LNG exporter, right? I think it's something like the second largest in the Middle East, and it's only going to grow because of all the investments by the big oil companies. So yes, it's bet on oil, it's bet on gas, but it's also bet on green hydrogen, and because it's got wind and sun. Right, some of the Gulf states have one or the other, but Oman has got both wind and sun, so that's great for green hydrogen. And it's not just thinking of exporting it; it's also thinking of using it domestically to encourage steel or whatever to be to be produced more low carbon methods in Duqm itself. So I think that's something to watch, and that's the creative part of the creative destruction, if you like.
Yeah, thank you. Yes.
Look, I think you can look at it as glass half full, glass half empty when it comes to the Gulf states.
Yeah.
In terms of energy transitions, I mean, if you wanted to look at the glass half empty, I mean, what you have is an accelerated transition that's particularly taking place in China. And we've talked about how important China is as a long-term market. And yet China, for energy security reasons, for economic security reasons, et cetera, is accelerating its own energy transitions faster than any other country on the planet and at a massive scale. So I think, you look at that, you also, can sort of look at what's happening in the US in terms of, drill, baby, drill, etc., but still a recognition that the green potentially provides a route to new industrialization, new opportunities as well. The glass half full, however, is the US. If energy transitions are dumped as a notion by the Trump administration, you don't necessarily have, a massive increase in oil and gas production domestically because price still matters. And I think that takes you to the strategic part of this, is there is a tendency to sort of see an alternative to oil and gas when you look at the Middle East. There's an emphasis on diversification, et cetera, which, is understandable. Management consultants are making millions out of driving diversification. But if you look at the numbers, even in some of the worst case scenarios that are laid out there for 2050, you're looking at what? 25, 30 million barrels a day of production. And the question is, where does that production come from? And the Gulf states, particularly Saudi Arabia, has an advantage. It has the advantage of being the lowest cost barrel, and it has the advantage of being fairly efficient in terms of its production. It has the availability of capital, and that capital isn't going to be disrupted by ESG or anything else. And crucially, the investments, I think, that are worth bearing in mind is the investments in reducing emissions, the emissions intensity of each barrel. Yeah. So at 20 million, if you are Saudi Arabia, if you are Abu Dhabi, and you're looking at the long-term market, why is your hair on fire? And in actual fact, you can capture that market, as long as there's enough of demand to meet what you are producing, you are the most competitive producer. And I think Aramco learned that lesson a while ago. So there's all the emphasis on diversification, the need for diversification, etc. But the reality is that diversification is entirely dependent on oil revenue. It has been, I mean, the basis of Abu Dhabi's vision was to take the oil revenue, to expand oil production, to be the producer of the last barrel, to provide the finances for diversification. And Saudi Arabia's is the same. And so, I think there tends to be a disconnect in the thinking.
Yeah, it's a two-track approach, but I think the IEA says that by 2050, I don't know if it said OPEC or OPEC plus. I mean, if one assumes that OPEC plus is going to survive another, to mid-century, that their share will go up to 50% from about 40-something percent.
But again,
now.
which OPEC plus is, I mean, the IEA focusing on OPEC plus is, quite frankly, a red herring. You're not focusing on OPEC plus. You're focusing on which countries are going to have a competitive industry, which companies are going to be competitive at that point. If you have lower market share, you know what? It's not going to be shale producers who can survive at 70 and start to sort of get hit at 60. It's going to be, you're going to go for the lowest cost of production, highest margin barrels, and those are they still remain in the Gulf.
Yeah. And Iman, final word from you. Where are we going from here?
Well, I think both of my esteemed co-panelists made all the key and very important points about this. I really enjoyed Raad's final comments, because that's what I have been also telling everyone, as people keep asking about the Saudi or the UAE's concerns and what are they going to do with oil demand peaking, and the answer is nothing. The worst case scenario is that, okay, if we go with one of the radical IEA forecasts, still by 2050 or even by 2100, we have enough for the last man standing suppliers in the Middle East when it comes to the cost of production to supply. So as long as we have 30-40 million barrels per day of oil demand, there's no worries for these guys, and if anything, their market share will continue to increase. So that is why I think they are very much active and kind of supporting the entire energy transition. And as it was mentioned earlier, Oman is doing a lot in hydrogen. Saudi is doing that. They are UAE, as you know, is one of the front runners in solar, and so all of this is done because that has absolutely no threat to their economies, and it will only diversify, but it will have to come at the cost of oil revenue over the investment. And hence, it is very important to manage that market. You can't just let that market go on its way and say that it's safe. No, it is going to fund these other projects, which is good for their economy and also serves their campaign of saying that, you know what, we are pro energy transition and we are pro renewables. There's nothing, as long as the world can afford achievable and affordable energy, then they have to go. But we're the lowest cost fossil fuel, and at the most aggressive energy transition scenario, you still need this region to supply the cheapest fossil fuel that you will need. So that will be my closing remarks on this topic, because I think that was well addressed already.
Yep, I think this is we've reached the end of the line. I want to thank you. Of course, we've got COP29 coming up in a few days, and that's where maybe a sort of a carbon market might emerge out of that, which would be useful to sort of finance a transition and provide some, a more regulated carbon market, which I think is missing at the moment. So I want to thank you all very much. Li-Chen had to rush off because she's actually at a seminar. So I want to thank you both. Really, really lovely to see you. Raad, see you from afar. And if you're in the region, do let us know.
I will let you know.
Okay. Thank you again. I think we're going to end it now.